Chairman. President Rosengren, you admit that the Main Street program is off to a slow start, but your testimony is that interest in the program will likely pick up if, quote, the pandemic and the economy worsen. But if you look at the data, Main Street companies are already getting crushed. The latest middle market indicator, an economic outlook survey of executives of mid-sized companies, shows that in the second quarter, these companies experienced the largest decline in employment in the survey's history. They also had the biggest drop-off in revenue in the survey's history. Other surveys like the U.S. Chamber of Commerce's Middle Market Business Index show the same thing: massive layoffs and furloughs and widespread revenue declines. So my question is, how much worse do things have to get before companies are interested in the Main Street lending program?
Well, I think we actually have seen significant pickup recently in the portal. Just as an example, there were $109 million loans in committed or settled as of last Tuesday. And 2 days later, we now have 29 loans and $189 million. So there is a pickup in volume. It's particularly in the community in mid-sized banks. Similarly, we had $530 million in loans in the portal 2 days ago. As of last night, that's $635 million. And so I think this is early stages of this program. And the reason is because banks and borrowers have to negotiate the terms. They had to know what the term sheet was. They had to understand the characteristics of the program and how the portal worked. And so it takes some time for the banks and the borrowers to get familiar with the program and to start pledging those loans to the facility. So in the first couple of weeks, the banks had not completed that process and the borrowers had not completed the process, and there was not much volume. And we're slowly seeing an increase in volume over time that I would expect to continue. So one of the challenges with trying to deal with bank loans as opposed to securities is it doesn't happen quickly. If you talk to large firms about a renegotiation of a line of credit, it can frequently take many, many months before they get the negotiation completed. So one of the advantages of a bank loan is that you are able to tailor it to the needs of the borrower and the bank. There are conditions that a different bank may put on that same kind of loan, and there are a lot of differences across both banks and borrowers in what these loan agreements look like.
Thank you, President Rosengren. Just in the interest of time, I'll move on, and I'll just note that even $530 million, which you said is in the pipeline right now, that's still a tiny fraction of the total lending capacity that was created for this program. Look, as I said in my opening remarks, I think this program has been a failure, and the basic reason for that is that the Fed can only offer loans. The data show that companies, even distressed companies, aren't looking for loans. Just this week, the Fed released a survey of senior loan officers finding that in the second quarter of 2020, demand for loans from companies of all sizes went down. Similarly, the most recent National Federation of Independent Business survey of small businesses found that only 3% of business owners reported that all their borrowing needs were not satisfied. And in the testimony they submitted today, the Bank Policy Institute, which represents some of the biggest banks in the country, said they've seen, quote, a lack of demand for Main Street program loans from their clients. So, President Rosengren, if the Main Street program can only offer loans, and it's clear that most small and mid-sized firms aren't looking for loans right now, even though they're already struggling badly, then how is this program going to stop widespread business closures and job losses?
So this program is tailored to organizations that will be helped by loans. So if you're a business that have had no problem from the pandemic and have a pristine balance sheet, you're probably going to get better financing than the Main Street program provides. If you're a business that's deeply troubled and is in danger of closing imminently, this program is not going to solve the problem because debt doesn't solve that kind of problem, equity does. This program is designed for a business that had a disruption in short-term credit, that was in good shape prior to the crisis, and who, after the pandemic subsides, would be able to be a viable business as well. There are businesses that fit that characteristics. We're seeing some of those businesses actually coming to the facility. I am expecting over time that we will see more pickup. Again, we are seeing some significant activity by some of the community banks and mid-sized banks, particularly those located in states like Florida, Texas, and places that have been badly impacted by the pandemic recently.
Okay, thank you, President Rosengren. Look, I recognize that you and the Fed staff have done a lot of work on this, but I think the issue is that the Fed is trying to solve a problem that doesn't exist, and it's incapable of solving the problem that does exist. By law, the Fed can only support loans, and more loans are not the answer here for most companies. And this is a giant hole in our economic response to the crisis. Congress helped small businesses through the PPP. Congress helped large companies that are big enough to issue bonds by empowering the Fed to purchase corporate bonds and reduce the cost of borrowing. But the only thing that the government has offered all these companies in between is the Main Street program, and it's just not working. And these mid-sized companies employ 45 million people and represent a third of private sector GDP. So look, I don't think continuing to tweak this program is going to work. I think Congress needs to act to provide direct support to mid-sized firms, and for that money to come with real strings attached so that the money benefits working people. Thank you, Mr. Chairman.
The gentleman yields back. Thank you. Congresswoman